All right, this is IPG or Interpublic Group of Companies. We are currently down a little more than 10% in the name, and so wanted to do a quick valuation just to kind of see where we stand, if we're going to stay or if we're going to go. What you're looking at right now is the world map. Now, IPG is an advertising company, and so they are one of the largest in the world, and definitely one of the largest in the United States. Most of their money comes from the United States, but as you can see, they do have businesses elsewhere. Now, this is the second quarter, June 30, 2024 report, and it shows a decline in Asia Pacific and also Middle East and Africa and all those other places. But in the U.S., income is up where it really matters. They are getting a bit of money out of Latin America, Europe, and the UK. And so overall, pretty good. I saw that they had an office in Quito, which I thought was really interesting. All right. I wanted to show just real quick. These are all of the advertising brands underneath the IPG umbrella. And so all of these are advertising companies. I don't know anything about these guys. And I did try to find out who their biggest clients were. Again, they're one of the largest in the world. So, they are working with just about everyone. All the lists that I did see came directly from their website, and it was not complete at all, but it did mention companies like Microsoft and General Motors and, all the big guys, right? Um, but again, I am really curious to know um, who their primary clients are because it can give me sort of an idea as to where their revenue may be headed. Because if the majority of their clients are, let's say, in the pharmaceutical industry, and if the pharmaceutical industry is not doing so well, then IPG may not do as well either. So we'll kind of go over a little bit of what that means here in a moment. One of the things that I did want to bring up that I do not like about this kind of company, but it is what it is. This is part of the consumer. Um, I'm blanking on the word. Not consumer defensive. Uh, the opposite of that. Consumer cyclical. There we go. Consumer cyclical. And so that means that this is basically a company that does well when the economy is doing well and tends to do bad when the economy is doing bad. And so that makes a lot of sense when you talk about advertising, because companies that are making lots of money are going to be spending lots of money on advertising usually. And when they aren't making a lot of money, they're going to be pulling back on their advertising dollars. Um, because of that, this company has a lot of intangible assets. Okay. And I do not like including intangible assets in any of my calculations, but with this particular company, I had to. But I wanted to show just really quick, they were gracious enough in their 2023 annual report to break out what those intangible assets were. And I wanted to show what they look like. As you can see here, the customer list is the largest intangible asset that they have. And so that is literally just, again, a list of their clients, which I was hard pressed to find online. It seems that they keep that pretty guarded, right? And this is important on the tax side of things, because I'm always telling my clients to think about those intangible assets that you may have, because that can help you on the tax side of things, right? Because that intangible asset is amortizable, and that amortization is a tax write-off, right? So customer list, know-how, and technology. I'm sure maybe they've created their own technology to help with, advertising or something like that. Trade names. Again, I find it very hard to believe that their trade name can be worth anywhere near 220 something million dollars. I don't get that, right? I mean, we kind of went through some of these brand names here at the top. And I mean, if you're going to sell one of these companies, I imagine you're going to sell the client list, right? I mean, that's what's valuable. The name itself is not like a household name. I haven't heard of any of these companies except for maybe McCann, maybe. Um, maybe it's different in the advertising world. Maybe, in the advertising world, these may be like big name brands, but I've never heard of any of them. So that's the reason why I personally don't like including any of those intangibles in my calculation. All right, so let's go through those just real quick here. What I did though is I threw in sort of a variable here to see what the um, balance sheet looks like without those intangibles there, right? And what I found is if I even reduce it by a little bit, the balance sheet goes to negative, meaning that the company is basically bankrupt. They owe way more than what they own. As you can see here, negative 4,600. If we take all the intangibles out, if we include some of the intangibles, even 50%, still sitting at a negative number. Um, I think 90% is what got me to even, right? So what that means is if there is ever any question at all as to the value of any of these assets, these guys can be in a bit of trouble. But thankfully, this particular company does not trade on the balance sheet. It trades almost exclusively on the profit loss. This has got to be my fault here. Okay. So anyway, based on the balance sheet, we do have a projected price anywhere from 18 to $74. Currently, the price is sitting at $32.38. We are in at about 36. So the question for us is, can this price make it to 36? Now, again, like I said, this company does not trade on the balance sheet like really at all. But it is nice to have the numbers there to at least have an understanding of kind of where the company is going, right? Because we want a growing balance sheet, right? And so we see here going back to 2020, I believe, or 2021. Yeah, 2020. We do have a growing balance sheet. Our prediction is not growing, but again, it's a prediction. This is based on the second quarter 2024 balance sheet, and by the end of the year, of course, these numbers are going to change. Who knows what they're going to be? But we can give a decent guess over here in the highlighted yellow area for the end of year 2024, possibly going out towards 2025. And we do have still a falling balance sheet, which again, I don't see that happening. Not sure exactly what number uh, can really make this difference. Statistically, the accounts payables are showing them pretty far down. So from 10,000 to 98, is not a huge drop off. So really not sure where that's going, honestly. Um, but again, doesn't matter very much at all. They don't have a lot of debt on the books. Matter of fact, I was just looking at that. I think their most current debt, I believe, is 2028, and they have some really decent interest rates. I think the lowest amount they have to pay back is somewhere in 2030 at like 5%. Everything else is less than 5%. And they even have some debt sitting out there at 2%. So pretty good. They do have a stock buyback plan in action. Whether or not they're going to continue purchasing shares at this $32 range, I don't know, because the last time they purchased any shares, the stock price was somewhere around $30, $31. So they do have a buyback plan in place though to purchase more shares, and so I do expect the share count to either stay the same or fall. Statistically speaking, these are our options: 386, 380, 388, and 378. I definitely don't think it's going to get all the way down to 378, but I also don't expect them to to sell any additional shares. So 380 is the only thing that really makes sense. Based on that, it gives us a book value of $2.88 a share. And if we look back historically where it has been, we see $4, $3, 250, and $1.50 way back in 2020. So there's no reason why this thing can't be in the $3 neighborhood. All right, let's go now to profit loss. This is actually where the stock price is made. And again, sort of in the same boat here. We see in red, this is the net profit going back to 2020. 688 in 2020, climbed to 1200, almost 1100, and then 1300 last year. Currently, right now, predicting the end of the year to be at 738, I don't think that's going to happen. I really think it's going to be much higher. The fourth quarter really is Christmas for these guys. Again, that's what makes them a cyclical company, right? When Christmas comes around, companies are spending a lot more on advertising, and so they tend to make a lot more money during Christmas time. So as of right now, as you can see, I have the full year revenue sitting at 9,000. Last year was 9,400. Okay. Now we know that it has grown pretty much every year. So 8,000 to 91, 91 to 94, and then a slight drop off last year. And so the question is, does that happen again? Now, this is 2023 that this drop off occurred from 2022 to 2023. But I don't think it's going to drop all the way down to 9,000. But again, this is solely based on second quarter 2024, and then I just multiply times two to predict, the full year. I do think the revenue is going to be a bit higher. The other numbers, though, I think are pretty much in line with last year. The only thing that is really a huge difference is the foreign currency exchange. And as we can see over the years, it's been up, it's been down, right? And so currently, right now, in the middle of the year, it is down. They are at a -80. Will they turn that around? It's very possible. Okay. If they do, though, honestly, it's only going to it's only going to let's see if I can do this. There we go. It's only gonna the net profit is still way down. So I don't know what number is going to change things, but I definitely don't believe net profit is going to be anywhere near this 700 by year end. So same thing here with our predictive numbers. I'm looking at 96. just kind of based on our options here statistically. Um, Everything else I think is really in line. Again, the equity, these are um, investments in other companies where they don't necessarily have a control over, right? And so again, that's kind of up and down. Um, if we look back, 2020, it was -4, -30, -20, -30. So my thinking is, I mean, 31 is kind of where it's at now. So how we got 126, I don't know. Let's just make it -46. There we go. But still, though, I mean, that puts us way down at 879. And I just don't think that's going to happen. And again, honestly, even if I took out the foreign exchange, it puts us at 11. It still puts us down. So this does give me pause. The truth is, though, I'm just not sure exactly what can change. Either we're definitely going to continue this downtrend as far as revenue goes, or something's going to happen that's going to dramatically change these numbers. Okay. Really at an impasse on this. It is possible that the foreign currency exchange can be a positive. And how this works is they get paid in, let's just say euros, right? And they then translate those euros into dollars. Okay. Now, we all know that the US dollar has strengthened a lot, meaning that the euro is cheap compared to the US dollar. So when you translate a euro into a dollar, you actually lose money, right? Can that flip between here in 2025? Possible. Can it flip between here and 2024? I doubt it, you know? So that's the thing. Now they do have some foreign currency swaps and investments and stuff like that, but not a lot, not enough to offset this, as far as I can tell. Just again based on history, right? Because every year, except for 2020, we see that they have lost money in their foreign currency exchange. 2022 looks like was another exception. So it's basically 50-50 at this point. And even if they do get some sort of benefit from the foreign currency exchange, it's not going to be huge. It's not going to be enough to bring it past that 1370 net profit from 2023. So I do think that the net profit continues to slide. I really do. Um, and so let's take a look at what that means for the stock price. All right. So currently, earnings per share, which is exactly what this thing is going on, $1.93, which is really low when you compare it to last year's $3.58. Even still, 2022's $2.81 and then 305. You got to go all the way back to 2020 to get to $1.76 earnings per share. And this is literally just how much net profit divided by the number of shares. Okay. Now, again, when they purchase shares, when they buy back shares, it reduces the share count. And so that improves earnings per share. But can they purchase or will they purchase enough shares to make a huge difference? I don't think so. I think the share count is going to stay right around that 380, 383. So with that being said, I do think it's possible that earnings per share does slide a bit, but I don't think it's going to slide all the way down to this current 193. I think it's going to go somewhere around $3. So I'll show you what that looks like here in a moment. All right, the PE is just how expensive or how cheap the current stock is. Okay, so here's what we're going to do. I'm going to take the earnings per share. I'm going to bump it up to 3. and I'm going to take the stock price. Now, in order for us to make a profit on this thing, we need to see a stock price of around $40. Okay. And so in order for that to happen, it means we have to have a earnings per share of 3, and that'll give us a PE of 13. All right. And if we look back historically, what the PE has been, now this is from the lowest stock price all the way to the highest stock price within these years. Okay. So in 2023, the lowest the PE was 7.6. It got up to 11.45. In 2022, 8.95 up to 1423. And as you can see, 7.5, 1290, 66 to 14. So in order for us to make a profit, we need to have a PE of roughly 13. And 13 is really high. Well, yeah, I'm going to say really high compared to 2023. It's almost in line with 2022, high again, and then in line with 2020. So again, we're like 50-50. You know what I'm saying? We're still like 50-50. I'm not even including the PE for 2024 because these numbers just don't make sense. You know, in order for these numbers to make sense, we would have to have an unprecedented um, uh, situation happening within the company, and we're just not seeing that based on the numbers, based on the reports, based on the earnings calls, right? Um, so we have to look at again 2023, 2022, 20, going back. And 13 is possible. But something, when that PE goes up like that, it's only because people think the company will do really good in the future, right? And again, I do think net profit is going to slide. It's definitely not going to slide as far as what I'm predicting here, but I think it will slide. Okay. And so with that being said, I think the PE is going to slide as well. And so what I'm curious about now is if we keep the earnings per share constant at $3 a share, right? The question is, what price does the stock have to get to give us a decent PE? Okay. And we see right now at $32.38, where the stock currently is, that gives us a PE of roughly 10.79, which puts us in line, but still gives us some room to grow, especially if we're talking about the end of 2024 out to 2025. It does give us some room to grow. So I think that the stock price can go higher, especially if that net profit shoots up a bit. And we know that the fourth quarter is their quarter. And so at this point, I almost want to say hold out. Let's see what the third quarter has. Fourth quarter, I think, can be make or break for this stock. Also, too, depending on what the rest of the stock market is doing will make a difference. We know that right now things are really high. So the PE is probably about as high as it's going to get right now. The stock market would have to continue moving higher in order to get this cyclical stock going. Let's try it at 36. That gives us a PE of 12. That's about right. So what I'm saying right now is $32.38 is a fair price for this stock. However, it does have room to grow. And I think it can get up to maybe $35, $36. That will not be unprecedented at all. Matter of fact, if we want to really try to dial this in, I mean, yeah, 12, 30, see, 37, let's go 38. Yeah, I would say, well, to be safe, I would say 36. Let's make sure I got that right. No, I didn't. There we go. Yeah, $36 I think is about right as the highest price that we can see within the next, I'll say, 6 months or so. So Definitely going to hold out. I think again, fourth quarter is going to be make or break for this company. Um, and again, it does have a little bit of room to grow. So we're not going to run away quite yet. Still getting a decent dividend. I think that advertising is a really cool cyclical company to be in because um, while it is definitely for sure cyclical, um, it's still almost like you have to have it. You know what I mean? Especially like these large companies. They may pull back some of their advertising dollars, but they're not going to stop advertising. And so I think it's a really good company to be in. And we're definitely going to hold out. Once it gets to that $36 mark, I will probably come back and do another analysis and determine whether or not we get out at that point, because then at that point, maybe it's a little too expensive.